The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 30th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something we must master each and every day. So let's begin our day with empowering beliefs. You know, beliefs have the power to create and the power to destroy. You and I, we have that awesome ability to take any experience of our lives and create a meaning that disempowers us or one that can literally save our lives and empower us to places we never even dreamed of. Think about it like this. There's only one thing you can control in life, and that's the meaning that you give something. That's the beauty of the markets we trade. We've got bulls. We've got bears. One that sees an event as a selling opportunity, and one a buying opportunity. Your beliefs, the meaning that you give to these events, the statements, any criticisms that might be thrown at you, you are the one in control of that meaning. I think that is the most awesome, the coolest thing when you realize just how much control you have, folks. You see, what we can or cannot do, what we consider possible or impossible, it's rarely a function of our true capabilities. It's more likely a function of our beliefs about who we are. And that matters because all personal breakthroughs begin with a change in belief. So, how do we change? I consider that to be a great question. And I found the most effective way to change is to get our brain to associate massive pain, I mean massive pain, to an old, disempowering belief. Do this, folks. Put it down on paper. We must believe at the deepest level that our disempowering belief has cost us in our past. Heck, you and I, we know that those disempowering beliefs cost us in our past. More importantly, if we continue, they will continue to cost us in the present and ultimately only bring us pain in the future. That is no way to live. Sometimes knowing what we don't want is just as important as knowing what we do. I think knowing both is key, because once we rid ourselves of our disempowering belief, then we can associate tremendous, I mean gorgeous, beautiful, incredible, tremendous pleasure to the idea of adopting a new empowering belief. And lastly, we must know that in any moment, I mean right here, right now, any moment, the decision that we make can change the course of our life forever. The very next person we stand behind in line, sit next to on an airplane, the very next phone call we make or receive, the next movie we see or book we read, page we turn, workshop we attend, newsletter we subscribe to, you name it, the whole kit and caboodle, folks. Any one of these could be the single thing that causes the floodgates to open, and all the things that we've been waiting for will fall into place. You know, folks, if you knew that everything was going to turn out okay, how would you live your life differently today? Well, let's go check out these markets here. Right now, we've got the Dow trading up 45 cents. S&P is down 86 cents. Composite off 477. Russell 2000 off 4 points, trading out at 11.17. Apple up $5 and change, trading out at 5.22. Microsoft up 9 ticks. Google back $7.50. Leading the charge, the upside is Buffalo Wild Wings up $10 and change. Baidu up $7 and change. Apple up 5. Grand Canyon Education LOPE that's up 470. Nuvasive Inc. NUVA up $4. Range Resources, RRC up $4. SM Energy up $4. To the downside, LinkedIn is leading. Oh, my goodness, LinkedIn is leading the charge big time. Now down $20. We'll go see how that is doing headed into the, see what that is going to be all about. Interesting. Questcor Pharmaceuticals up $12 and change. Parexel, PRXL, I don't know that I got that right, but it's down about $9. IAC Interactive Corp off $7.50. Google down $7 and change. Digital Realty off $7. Netflix off $6.60. Sherwin-Williams down $6 and change. Equinix off $5. Our call-in number 877-927-6648. Give us a call, folks. We'd be happy to take a look at your stock chart or anything that you like. Let's start off by taking a look at the New York Stock Exchange. Now, I've been calling, as you know, if you've been listening on the show, I've been calling for the NYSE to get up to that 10,100 and 10,118 level. What have we seen so far here? We've seen a high of 10,127 versus 10,121. That A to B equals CD. That is done. Today, folks, today on the New York Stock Exchange, if you were to see it close below 10077.83, $10,077.83. If you were to see it close below that, you would have the completion of an A to B equals CD pattern, and you would have a confirmed sell signal on there. That would be giving you a bearish engulfing. So you want to be paying attention to that. What we also want to be looking at inside the New York Stock Exchange is going to be net declining issues. Let me open up my spreadsheet here off to the side. Let me get to the tab that's got that. I'll go ahead. I'm happy to give you that number, minus 1545. If there are 1,545 net declining issues to boot on top of a close inside the New York Stock Exchange, I'm not saying it's going to do it. I'm just telling you what it is that you need to look for. And if today you see it close below 10,077.83, that'll be your confirmed that the Bulls have now fumbled the ball and given it to the Bears. So that's on the NYSE. That's what it is you want to take a look at out there. If we take a look at the VIX index here, the VIX index, I don't know if I can look at it. That's like one heck of a spike. That can't be real. That's a bummer. I'll have to take a look at that because it bounced up to 2175. Let me try to delete that and then try to come back. Give me a moment here to try to do this. See if I can do this. So it looks like I got a bad tick there. I can't tell you what I have. Yeah, so I got a bad tick on the VIX. My apologies. So what I can give you, though, is I can give you the 50-day exponential moving average. That's about 1487. Looks like it's trading out at 1403 right now. If you were to see it close above 1487 today, on top of those other things, that would spell double trouble in the marketplace. So that's what we want to be looking for. That's what we want to be watching inside of those two. Let's go take a look at the S&P 500. Let's go see what we've done out here, what the market has done. The 1-to-1 A to B equals CD. There's two of them out there. 1776.40 was the number. What we've seen so far is 1775.22. Guess what, folks? That is a completion of that. That's good enough for me in my line of work out here. That's an A to B equals CD. So we've seen the completion of that pattern twice now. The larger pattern, the larger A to B equals CD coming off of the June 24th low, up to the high out here on August 2nd, down to a low on August 28th. That gave you the 1-to-1, 1776. And then we have an A to B equals CD within an A to B equals CD pattern. That was the August 28th low, all the way up to the high on September 19th. The pullback into the October 9th area, that gave you a 1776 price projection as well. Now, today, in order for the bears to show up, what do you need to see? Well, you would need to see, ideally, a bearish engulfing candle. That would be a close below 1762.93. Right now, trade out at 1771.55. So no type of confirmation there inside of the S&P 500, but we do have some completed patterns for us to be paying attention to. Inside of the Dow, let's go take a look at that. Let's take a look at the daily chart inside the Dow. We know we've been tracking this 1,000-point consolidation pattern. Also, what the Dow has done, it's tested the swing point high from September 18th. That level, 15,709.58. The intraday high so far that we have seen has been 15,679. No close above it. And what you'd have is a rejection of a swing point as well as a staying with inside the consolidation pattern out here. Yeah, I could just move this yellow area up to the up a bit, but you guys get the picture out here. It's been a 1,000-point consolidation range. And what we do know is that lately, the last several trading sessions, what we have seen has been some light volume inside of the marketplace. So we got another completion of a pattern out here inside of the Dow. Now, today, a Dow, your bearish engulfing candle, would take quite a reversal. That would be a close below yesterday's open at 15,572.21 out there. Don't know whether we'll see that, but that would be I would say in the case of the Dow, it's a little bit easier than that because really, if it can't break the consolidation, the heck with the reversal signal out here. It just can't break the consolidation. Your back's up against the wall. So, of course, your ultimate would be a one-day reversal signal. Don't know that that's what's going to happen. Let's take a look at the Russell 2000. Let's see what it is doing. Let's get away from the monthly chart. Let's go take a look at the daily chart. So the Russell here on the daily chart, just not enough energy to complete the larger A to B equals CD yet. That price projection was 1129.75. It did complete the smaller pattern, so kind of in between here. You got a little bearish engulfing candle that is forming here today. First time we have seen a bearish engulfing candle in quite some time. What would it take? You would need to see a close below. Let me just make sure I got all updated data here with so many things on my screens out here. You need to see a close below 1118.86. That would be your bearish engulfing candle, and that would suggest a retracement or a pullback. How deep? Well, I would say at least come back to the trend line that was established off of the November 16th low out there. Your next touch points would be the April 18th level. Let's go take a look at the composite. Let's go see what the composite is doing here. Composite had two A to B equals CD patterns. In essence, those have been hit. 39.7285 was the larger pattern. The high so far today, 39.6671. So that is close enough to having been completed out here. That is in the composite. How about the NDX 100? Let's go see what it is doing here. The NDX 100, well, it has not hit its price projection. So this is probably where we really get to, it's going to be the NDX that will have to pull the markets higher out here. And it has a price projection of 34.34 to 34.66 out there. We'll just have to wait and see whether or not it's going to be the NDX 100 that's going to pull things up. I suppose Apple, everybody then would be looking to Apple, so should we. So let's go take a look at Apple. Then we'll go look at the ETF structures out here. We'll take a look at Gilead in a little bit. Apple right now is trading, let's not trade, well, these charts here. Let me get this, make sure I've got things updated. So Apple is trading up a bit, but, boy, that doesn't look real impressive, does it? If you take a look at yesterday's candle, I didn't look at Apple, so now this is my first time looking at Apple. And so here's what we know about Apple yesterday. Let me go ahead. I'm going to get rid of the A to B equals CD pattern for the time period. I'm going to go ahead and blow this up on the chart for you. So I'm going to pull, oh, man, what did I do there? So I'm going to pull this back. Now, when you take a look at this candle session here yesterday inside of Apple, and it's a daily chart that we're looking at, AAPL, by the way, that's a ticker symbol. What is it that you see out there when you take a look at good old Apple? Yes, you do. You do see a bearish engulfing candle. That is a reversal signal. But what else do we know? What we know about Apple is if you take a look at the red squiggly line kind of in the bottom center of my screen, you can see that Apple was in an extended condition. It was in an overbought area. What we have here now, folks, is we have a key reversal session on top of a bearish engulfing. Boy, if Apple breaks back below 513.74, that is telling you lower prices will be coming at us. 877-927-6648. Be right back, folks.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 5. Everything else, you got the S&P is off a buck. No big deal out there. Composite down 270. Russell 2000 off 380. So we're taking a look at Apple and taking a look at the candlestick that had formed yesterday. Key reversal session. You may remember late last week. I don't recall if it was Tuesday, Wednesday, Thursday. We saw some key reversal sessions inside of the NDX 100, the composite. That was coming from the strong hands out there, and those are warning signals of potential changes in the marketplace. Now, in the case of Apple here, now in order to get a key reversal session, you need 3 things. Number 1, the market needs to be in an extended condition. There's a couple different ways that you can really go about measuring an extended condition. One might just simply be the lightning bolt pattern, the A to B equals C to up, the completion of that. Another way is taking a look at the relative strength indicator, the RSI, using a 14-period, and determining whether price is at or near the 70 level. That's the overbought zone. At or near the 30 level, that would be the oversold zone. In this case here, that's certainly what we have in place. And then the third thing is you need price to close in the opposite direction of where it came from. Well, yes, so you got a bearish engulfing candle and a key reversal session. So that says that resistance most certainly is the high of yesterday, which is going to be 539.25 out here. If we go take a look at a shorter term chart, let's just see what kind of patterns, if anything, are forming on the intraday chart here. Let's look at a 30-minute chart for Apple. Let's take a look at volume. So in this case here, Apple does have on a 30-minute chart a high volume high out there and says, you know what, it could go test at least the low of that level, 529.30. So it's trading at 523.31 as we speak. So that's what's going on inside Apple, but it did give a reversal signal yesterday. Let's take a look at the other equities within inside here. Actually, we had a request to take a look at Gilead, G-I-L-D, for Peak D in the den, I believe. And so we're going to take a look at Gilead. Let's take a look. Let's first go ahead and let's do this as we take a look at, here it is on my screen. And let's take a look at the monthly chart out here, because I think on Gilead, give me a moment to pull this back, monthly chart. No. Got something wrong with the data. So on the monthly chart, boy, this thing, look, GILD is the ticker symbol. Well, nothing bearish about this pattern formation out here. It's up at 72.30. It is a little rocket ship, so no real reason to go ahead and try to give you some kind of where this is headed to, because there's just really no pattern here that I can see that one could that I could easily come up with. Let's take a look at a weekly chart for this equity, see what it's doing on a weekly basis. I guess on the weekly it's, well, no. So so hold on a minute here. This wasn't showing up on my monthly chart. That's interesting. Okay, it's gone. I don't know. You know what? I tell you what, Peak D, seeing that candle formation, I don't know what the heck was going on there. So I'm not gonna give you Gilead, because I don't know if I've had a couple of charts here that have shown up and have had some weird signals. So in lieu of rebooting my system, which I'm not going to do while I'm on the air here, I'm going to pass on giving you because I've got some kind of data issue with inside of Gilead. IBB, that might be a whole different story. That was the second request, so I can certainly do that, but something seems to be wrong inside of Gilead. So let's go take a look at IBB. That is the biotech sector for the NASDAQ. Let's go see what chart patterns it is that we see out here. So this is the daily chart for the IBB right now. It's trading out at 210. It has a update this, make sure I got all the active data out here. 10:30. Yeah, we are in October 30th. So we take this back on the daily chart for the IBB out here. You've got some resistance that it has not been able to clear. And that was this little bear sash, a bearish engulfing candle right here from the trading session of October 3rd. So what the IBB needs to do in order to break out is get above this resistance level that was established right here. So a bearish engulfing candle is going to set up the high of the prior, the high of either of the sessions at the highest high of the engulfed sessions, and that's going to be the October 2nd high out here. So that is resistance for this equity. The volume up there at that swing point, about 1.2 million shares, came up there with only 553,000 shares a couple of trading sessions ago. So the buyers are starting to dwindle inside of IBB. That doesn't mean that it is a short here necessarily. You did have a little doji candle that had formed here yesterday. Today you're seeing some leaves fall from the tree. Now, doji candles at resistance, they have a ton of meaning for me out here. So you're already into a resistance area. It's really giving you a indication that this thing is losing some steam. IBB is probably more likely to come down and test this high volume low out here, October the 9th session out there. So the IBB should head to the 191.29 to 199.35 level. 877-927-6648. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up about 4 points right now. We can go barefoot skiing, water skiing out here. You've got the S&P is off 26 cents. The composite is down 19 cents. Russell 2000 off $3. Quick, how about that? A quick peek in at the New York Stock Exchange. It's off $4. So also flat out there, about 287 net declining issues. All that being said, let's go check in on the ETF structure within inside the S&P 500. We took a look at it yesterday. Let's see what kind of signals we've got in it, if anything, at this stage. The XLB, it is completed the 1-to-1 A to B equals CD. No real reversal signal here yet inside this. If we were to see a close below 44.02, that would give us a bearish engulfing candle. Looks like it would give us a bearish engulfing candle there. That's on the XLB. Let's take a look at the technology sector. Number one weighting inside of the S&P 500, completing the 1-to-1 A to B equals CD yesterday. Volume-wise was hold on a minute. Man, oh man. Let me see here. Yeah, that can't be right. There's no way that we did 1.3 million shares yesterday. Maybe somebody out there could 1.3. No, let me look at another chart. Let me see volume. No, oh boy. So I've got game plan B. So instead of being able to take a look at the volume, and I know that's not how the session finished yesterday. Oh boy, nothing like. There we go. Okay, now we got it. just got to be a little patient here. So yesterday we had a little bit of a gap up. I did it with some decent volume, so he gapped up into a D point. That is normally not how you complete a move up into an A to B equals CD. That price projection was 33.83. The actual close was 33.83 yesterday. How's that work? But today, if you were to get now because that's such a small-bodied candle, see, we'll blow this up on my chart here for you. I'll do this. It'll be easier. I'll get rid of the A to B equals CD pattern. We can always draw that in. So if we take a look at this candle, now this is going to be important for us to be paying attention to the XLK out here because it's such a small-bodied candle, it'd be very easy to have a bearish engulfing candle. All it would need to be a close below 33.80. It's trading at 33.85 right now. You need to see more conviction than just that with these small-bodied candles out here. And I would have to say conviction would be just to engulf the entire candle and actually close that window by getting into the 33.64 level. So if it closed at 33.64, that would be a decent reversal inside of the XLK. Let's see, the high yesterday, 33.90. Today the high would be 33.90. That would also give you a key reversal session. The last time we had that in the XLK here was on October the 22nd. So just something for us to be aware of out there. But at this stage here, the XLK not giving us any kind of a bearish signal out here. Let's go take a look at the financial sector, the XLF. I'm going to update the chart here. We're going to be patient and wait for it. There we go. That's acting a little bit faster here. So as we take a look at the XLF, this was running into resistance out here. Let's take a look at its last resistance line, see if it closed that. It did not. Today it's trading inside that. We're going to put a black line across the screen. So a little bit of a breakdown session between October 22nd and October 23rd, creating that little open window out there. On the low of October 22nd, $20.88. Volume there in that swing point, 31 million shares as well, and it's a swing point. Yesterday came in, light volume, rejected it on 22 million shares, closed below that. That was the first test. Today you would need to see, in order for a rejection to take place, you'd need to see a close back below 2088. It's trading at 2091 right now. Volume here during the first hour of trading, a little over an hour. It's on 5.6 million shares going into 31, so it's got good volume at the early stages here. And the XLF, I believe, is the 2 or 3, number second or number third weighting structure within inside of the S&P 500. Let's go take a look at the second or third, which would be the health sector, XLV. Let's go see what it is doing out here. The XLV, here we go. Now, of course, I need to update this. Make sure we're taking a look at some active. There we go. So now we've got the XLV. It's trading out right now at 53.10. It's threatening to form a bearish engulfing candle. That would be a close below the open of yesterday. That would be 53.08, and that would be a bearish reversal signal. Now, we haven't seen any kind of bearish reversal signal inside of the healthcare sector since coming all the way back here to September 19th. September 19th, we saw a little dark cloud cover. We saw a continuation on September 20th out here. So this would be the first time on this move move off of the lows out here where there could be a potential reversal signal inside of the second or third weighting structure inside of the S&P 500. So a little bit of pain here. It does still have a confirmed A to B equals CD up. That full price projection 53.86. So far we've only seen 53.50. So on a $50 stock, you could. At this stage, if you got the bearish reversal signal, you'd have to say the pattern is done. And then as far as any pullbacks, I would say would be looking at coming back and trying to test the October 9th swing point low. That would be in the 49.58 type range out there. So that's on the XLV. Let's go take a look at the XLE out there. That is the energy sector. That's the fifth weighting structure, I believe, inside the S&P 500. I need to update this chart here. That looks like, give me a moment here, has completed the 1 to 1A to B equals CD up. That price projection, well, of course, it completed it a couple of trading sessions ago, October the 22nd to be exact, when it got to 87.59. So now what we're taking a look at is a test of swing points. Let's go ahead and get rid of this, make it a little bit easier to look at. So today we're seeing the energy sector, the XLE, test the October 22nd swing point. That's got 14.2 million shares. The high, 87.59. What we have seen here so far today is 87.62 on 2.8 million shares out here. So a close on less than 14 million shares would be a rejection of a swing point that it completed. A to B equals CD on light volume out here. The energy sector, as we take a look at potential pullback areas here, I'd probably have to go just simply with the trend line. And let's go for that. Let's just go to the weekly chart here for the XLE. Give me a moment here. Let's pull that up. It's always good to take a look at daily, take a look at weekly out here. This has got some beautiful support levels. So if we take a look at the XLE, this is now the weekly chart that we are taking a look at. Very strong candle session here that took place the week of October 18th. Now, and as I've mentioned to you in the past, markets don't end on trading sessions like that. Of course, now what we've got here is a second week of a potential small-bodied candle out here. And so any type of pullback, I would say, would be looking at the rising trend. And that trend line here, pretty much using the low from June 8th, the week of June 8th out there, and the next touch point really being the November 16th. Both of those are pretty significant lows, and they are really good to be able to use from a trend for a trending technique out here. And you can see that level has been tested on many occasions here and has held. And I suspect that any pullback would also hold this time around. But you got to take things one thing at a time. That is on the energy sector. Let's go check out some of these other stocks here that are popping and dropping in the marketplace. Let's go see what we've got. LinkedIn, which is down now $19. So let's switch back over to some of these stocks. LinkedIn is it's Baidu. Okay, so here's Baidu. We were talking about Baidu earlier. The black line going across my screen is the last swing point high out here. It has failed miserably from a volume standpoint. It's got good volume today out here, but looks like that is going to be a resistance level for Baidu. Let's go back and take a look here at LinkedIn. It's got some volume picking up to the downside. LinkedIn now has tested the high of October 9th, it looks like. The high there is 213.50. So far intraday, it's been down to I take that back, 226.25. The high is 226. Okay, so 25 cents away, but it's coming to that swing point with too much volume. Hopefully it doesn't close. If it closes inside that swing point today, well, that sets up a definite test of the low of 213.50 out there. If that area doesn't hold, LinkedIn would be looking to come all the way back down here to May the 3rd out there, 11.6 million shares. So we'll still got to take this one thing at a time, but as the leader in the clubhouse to the downside, that's LinkedIn. Questcor Pharmaceuticals, QCOR, let's go see what it is doing out here. That's trading off about 14% this morning. Questcor down with some volume as well. Let's pull this out. So this is coming back into a breakout area. Let's get rid of the moving averages that are out here, the 8, the 21, the 50, the 200. So Questcor Pharmaceuticals looks like it's going to come back and test this little gap area out here. This thing broke out on the trading session of July 31st. Did it with volume of 12 million shares. You can see it came back into this area with light volume. Let's put the line across the bottom of the screen as well. Makes it a lot easier to visually see that. So you can see that this thing here now today pulling back with 5.4 million shares. Last time this thing pulled back, it only did 7.8 million shares for the entire day. So this thing here is pulling back with some volume out here. We'll see if that level can hold the support, which is going to be somewhere around the 52.49 level. If that area fails, Questcor Pharmaceuticals will head all the way back into the June 11th area, June 10th area, price range around $37 to $42.50 or so. That's if it breaks through and closes below 53.41. That's on Questcor Pharmaceuticals. Let's take a look at Digital Realty. DLR is the ticker symbol. Let's go see what this is doing. Well, it's trading down with big volume today. This does not look good at all. So far today, gapping down with a total of 4.5 million shares. DLR is the ticker symbol. Let me see what they came out with their numbers. They did net revenue of $379 million versus $342, so beating the top line nicely. Net income out here, if I can find that. I don't see it, but this stock here getting hammered and coming all the way back to this high volume low. Imagine that. High volume low on this thing that's sticking out takes you back to December of 2010. Now, the low there is 47.42. Let's draw a line across the bottom of that, as well as the volume. That's where it's headed to, 47.42. And it's coming in, looks like it's coming in with more volume than we saw at that low. This thing has got some volume spikes, doesn't it? Yeah, so it's coming in there. Let's put this back a little bit further. Let's put it on a weekly chart out here. So where it's coming back into is this high volume weekly low, that 47.42. That's got 14 million shares out there. If that area breaks, this thing here will probably make a dash for about the 39.84 level to 34.53. Takes it all the way back to April of 2009. Ouch. Ouch. Let's go take a look at Ultimate Software. ULTI is the ticker symbol. That is up about 5% here this morning. ULTI is the ticker symbol. Let's see what kind of volume is behind this move to the upside. See if they were out with some earnings reports out there. Looks like they did total revenue of $103 million versus $82 million. Nice top-line growth. I don't see the bottom line out here. But moving up this morning, so far, so a very thinly traded stock out here, 112,000 shares on average. Sometimes it does maybe 130,000, 186,000 shares out here. But nonetheless, this thing looks like it's at all-time highs. Let's put this on a longer-term chart out here, and it most certainly is. So nice-looking stock chart. This thing came off of its lows back in 2008. The price point around $11. It's at $160 right there. That is a nice return, nice 1,000+% return or so on this equity. Don't see anything, no way to give you a price projection on this, not with regard to any pattern that I can muster up, but all looks pretty good. This is Ultimate Software. Let's see what Ultimate Software actually does out here. See if let me give you a chance. Can we give this a chance to load up? See what Ultimate Software. Come on, baby. This system, my system. Ooh, that's not good. Okay. So that's really not good. So I just lost my data feed with a minute to go out here. So what do you guys want to talk about? I'm going to try to get that thing rebooted out here during the next minute. But I am flying blind out here, and I don't have a backup for when that actually. So let's talk about some things that we've got going on here at TFNN. This evening, we've got Andy Heck. He is going to be hosting a workshop, and all the details are on the homepage of TFNN.com. Now, in order to get into Andy's workshop, all you need to do is, when you get over the homepage of TFNN.com, sign up for his newsletter service. Right now, I believe it's $39 a month. That is going to be going up. So, all you have to do is become a newsletter subscriber. It's a real easy thing to do. You've got no real risk, so you can test drive the newsletter. You can attend a great workshop. Next Friday, we got Basil Chapman. He's going to be teaching the Chapman Wave. All the details are on the homepage of TFNN.com. My recollection is that comes with his book that he's got out there. That's like a $250 value. Comes with 1 month of his newsletter subscription. So it comes with a lot of nice bells and whistles out there. Hey, how's that for using a minute and a half out there while my system gets back up and running? It worked for me. I hope that it worked for you. 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve. Yet, you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 8 points, S&P up 1, Composite up 2, Russell 2000 back 3 points out here. We've got my system back up and running. That makes things a lot easier. You've got the gold is up $9, silver up 50 cents, up 2% out there. Light sweet crude trading back 95 cents. Let me see what we have going on over in Europe. Let's go take a look at it. The FTSE is flat. The DAX is flat. Let's go see what we've got going on around the world out here. The FTSE here was trying to take out a long-term resistance area. Now, this is a weekly chart that we're looking at here, so until the week ends, we won't know if this is going to break out. That's the black horizontal line that we see going across the top of my screen. I'm not using the actual wicks here. Right now, I'm just using the bodies of the candle, so a real breakout inside the FTSE would take place back with a close back above May 24th, weekly high, 68.75, 62 out there. But right now, I would say it's in the area of significant resistance, but a breakout here would be very impressive. That is inside the FTSE. So we'll have to come back a couple trading sessions from now and take a look at it, or maybe look at it on Monday morning. We did hand the ball off to Asia nicely last night, but we can see here that the Nikkei has really been kind of consolidating ever since it had gapped up on September 3rd out there. So the size of this consolidation, I'd say the low of that session, 13,748, we'll call it 13,750, and the top of the consolidation about 14,800. So really about 1,000-point consolidation as well. That is inside. When I say as well, our Dow is in a 1,000-point consolidation. The Nikkei looks like it, too, is in about a 1,000-point consolidation pattern out there. Let's take a look here at the DAX. See what the DAX is doing. It's completing its 1 to 1.272 A to B equals CD pattern. The price projection on that is 91.01. It actually got up to 90.70. So, it's about 30 bucks shy of that, but completing another pattern. So we've got patterns all over the place here. A to B equals CD patterns running into rising price channels out here. And so, and we're into areas, if you use the relative strength indicator, where the market is also in a overbought condition. So, what you want to pay attention to today, in my opinion, is the following. Number one, net declining issues. Again, in the New York Stock Exchange, if we were to see net declining issues in excess of 1,544 today, that would tell you that the bears have taken control of the ball. You want to take a look at the VIX. Unfortunately, I've got a bad tick on the VIX, but I can give you the 50-day exponential moving average on that. I believe that's about $14 and change. Yeah, the 50-day exponential moving average is $14.88. You're at $14.10 right now. If you were to see a close above that, boy, that would be double trouble, because all real damage takes place in the market when you see a VIX reading above the 50-day exponential moving average. Inside of the Dow, the Dow here is in its 1,000-point consolidation level. Right now, we've seen a test of the high September 18th, and if it can't break out above that, it says the potential of a 1,000-point move to the downside. Long-term consolidation has been going on since May of 2013. By the way, this is October 30th. The actual unfavorable seasonal cycle, that ends tomorrow, and then we actually pick up and we move into the favorable seasonal cycle out here. So if the Dow is able to break above the level of 15,709, that says a 1,000-point move out there, about a 16,700. Inside the S&P 500, we take a look at that here. That has completed two A to B equals CD patterns in the 1776 level. Folks, stay tuned. Basil Chapman is up next. After Basil, we've got our man Larry Pesavento, Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. Look forward to seeing you tomorrow.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.